Today, we will talk about issued shares, including an explanation of what they are, how they affect ownership of a company, and an example to help you better understand. Issued shares are a subset of a company's authorized shares that have been sold to and held by the shareholders, including insiders, institutional investors, and the general public. This also includes stock sold publicly and stock given to insiders as part of their compensation packages. Companies have authorized shares, which is the total amount of shares they can ever issue or sell, and issued shares, which are the portion of authorized shares that have been sold or placed in the market, including shares held in the company's treasury. Issued shares differ from outstanding shares, which are the shares available for purchase by investors but do not include shares held in the treasury. Issued shares have also been authorized for future offerings but have not been issued yet. A company issues a share only once, after which investors may sell it on the secondary market. Companies buying back their own shares remain listed as issued, even though they become classified as treasury shares. The number of issued shares is recorded as capital stock, or owner's equity, while shares outstanding are listed in the company's quarterly filings with the Securities and Exchange Commission. Issued shares generate assets or other value for founding a company or growing it later. Ownership of a corporation can be measured by identifying which investors were issued shares. Ownership can also be measured using issued and outstanding shares, along with those that may become issued if all authorized stock options are exercised, known as the fully diluted calculation. Ownership may be measured using issued and authorized stock as a forecast of the position shareholders may be in at a future date, known as the working model calculation. Boards must use the same calculation when making decisions or plans for the business. For example, if a startup company issues 10 million shares out of 20 million authorized shares to an owner, and the owner's shares are the only ones issued, the owner has 100% of the corporation. Boards use the fully diluted or working model calculation for planning and projecting. If the board believes it may issue 2 million additional shares to an investor and offers 3 million shares as stock options to high-performing employees, it might offer the founders additional stock options so they do not significantly dilute their ownership percentage. Here are 3 key takeaways. 1. Issued shares refer to a company's total stock of equity shares held by investors, insiders, and held in reserve for employee compensation. 2. Unlike outstanding shares, issued shares factor in treasury shares, stock a company buys back from shareholders. 3. The number of shares issued must first be authorized and approved by a company's board of directors. Hope this would help. Thanks for watching.